I'm Will Beecham, ICE's Chemical Business Deputy Editor, and I'm here with Paul Hodges, Chairman of International Echem. Hello, Paul.
Hello, Will.
You've written an article for us in the latest issue of ICE's Chemical Business, which is called Hope is Not a Strategy. And the hopes that you mentioned there are people hope that China growth will continue unabated and that the high oil price the prices will return to the highs that we previously experienced. I'd like to ask you, first of all, just to look at China. What's happening in the China market at the moment?
Well, you can look at it in two ways, I think. One is, if you look at the detail of the markets, you can see that the current 5-year plan from 2016 to 2020 is establishing a quite different basis for the industry. The basis is summed up by the word self-sufficiency. So in the C3 chain, for example, by 2020, they want to get to 93% self-sufficiency. And you say, well, how is that going? Well, this year so far, they're at 87% self-sufficiency in polypropylene, one of the bigger products, obviously, versus 77% 2 years ago. So you can see that if you've gone from 77% to 87% and your target is 93%, that creates, you're on the way there. It creates quite a different environment. And so people who were selling polypropylene into China from the Middle East or from Northeast Asia are now having to divert those sales into Europe and into the States. So you're getting a lot also of interpolymer competition. So if you look at the issue around the propylene contract price, for example, in Europe, if you go back a year, propylene contract price in Europe was about the same as the ethylene contract price. Today, it's 70%. So a fairly dramatic change in a very short period of time. Now that's one element. The other element is there is a major political conference coming up this time next year where the new leadership of China will be decided for the next 5 years. And several of the current Politburo Standing Committee retire and new ones come in. And there is a ferocious fight going on between the two main factions, the populists and the Young Communist League group led by the premier Li Keqiang and the princelings, as it were, those who are descended from the original revolutionaries led by President Xi Jinping. And this battle is being played out in all sorts of areas, and we don't know how it's going to end. So you keep getting one week you get vast amounts of stimulus going in from Premier Li, and then you get President Xi stamping on it. It's almost a game of whack-a-mole. You bang, he pops up there, pops up, and so on. So a lot of uncertainty.
But what it does mean is that the industry globally can't rely on China as a massive export market anymore.
No, I mean, I think if you take the two core assumptions over the last few years, one is that oil prices will always be high and give US gas-based production a competitive edge, and B, whatever you can't sell anywhere else can always go to China because it's double-digit growth. Both of those assumptions are pretty clearly wrong.
You mentioned the oil price. Can you give us your long-term oil forecast?
Well, I think you have to look at the oversupply we've got today, the record inventory levels that we've got, and the fact that we've just had this OPEC discussion, it's not been a meeting, where all they're talking about is a production freeze at record production levels. So although the traders and the hedge funds and so on can speculate all they like, that isn't going to rebalance a market which is so dramatically oversupplied. And we need to bring in new factors such as the circular economy. The Paris Climate Change Treaty is about to go in force during October, November, because once the EU ratifies it, that gives it the 55% necessary. So that means that at the moment, only 5% of all plastics are used more than once.
Right.
74% of plastics, nearly 3/4, are thrown away. The oceans are filling up, literally, with plastic. You kind of think to yourself, this can't continue. We're going to have to get more efficient. We're going to have to be more sustainable in our use. Now, that's not necessarily a bad thing for the industry as a whole, but if you've built a business just on supplying more product, it is bad news.
And just in terms of the oil price, are you sticking to your long-term forecasts of like $30 a barrel or so?
Yeah, absolutely. I mean, that's always been the long-term price. You can see we've chatted about it. The influence of the central banks and the hedge funds and the financial players. If you look at this year, the financial futures market, which typically has traded about twice the physical volume, has been trading 8 times the physical volume. 8 times, based on cheap money from the Federal Reserve and so on. And that's just swamped the reality of supply and demand. But we know what the reality of supply and demand is because the International Energy Agency tells us we have all-time record inventories.
Okay, so what does that mean for the US producers we've got all this production coming on stream? Can they keep their competitive edge with those kind of oil prices?
Well, I think it's going to be incredibly difficult for them. I mean, you've got 6 million tonnes of new ethylene capacity coming on stream next year, and maybe a bit of it is delayed here and there. So, but these are big companies, they know what they're doing. So we have to assume that it's going to be there or thereabouts by the end of next year. And the question is, who is going to take 6 million tonnes of new ethylene? Because it's not going to go in the States. You know, everybody agrees the US is a mature market, and probably with plastic bag bans and so on, probably flat, maybe even declining.
And at the seminar this morning, you mentioned protectionism. We've got the Brexit vote. We've got possibly Donald Trump becoming US president. What would that mean for the chemical sector? More a rising tide of protectionism.
Well, if you look at the 2 main candidates, both of them are now talking protectionism. So Hillary Clinton, who husband after all brought in NAFTA and so on, she was the one who said the Trans-Pacific Partnership is going to be the gold standard. She's now publicly against it. Donald Trump, very much against it. I mean, Trump has said if he gets elected, within 6 months, he is going to disband NAFTA, the North American Free Trade Area, which he can do. He doesn't have to go to Congress. It can just go like that. So, and if he gets elected, he's going to have a trade war with China because he says they're manipulating the currency. Now, it's easy to stand here and say, oh, that's never going to happen. Well, people said that about Brexit in June. Oh, nobody would be so stupid. Well, actually, stupid or not, they've done it. And I'm not saying that Donald Trump's supporters are stupid or anything. I'm just saying, if you look at it from the point of view of nobody would be so stupid, I think you're missing the point. I think there are a lot of people who say, no, you're the stupid ones. And that's the debate that I don't think the industry has yet woken up to.
Well, with all these disruptions going on, what can the industry do? How can you thrive in this environment?
2 things. One is you have to recognise that change is underway and that the world is a very much more uncertain place than at any time in the last 20 or 30 years. You really do not know what the oil price is going to be. If you look back over the last 3 years, the oil price has been $27, $50 and $100. Is there any reason why it shouldn't be any of those over the next 12, 18 months, 3 years again? No. Do we know what's going to happen in the US presidential election? Do we know what's going to happen in France with Marine Le Pen? Do we know what's happening in Germany in the elections and so on? And of course, Brexit, nobody knows what's happening there, or indeed, as we talked about with China. So you, first of all, if you want to be a winner, you have to be much more aware of the uncertainties. And then, and I think this is the critical point, what we now have to do is we have to focus on demand rather than on supply. Feedstock cost is nice to have advantage, feedstock advantage, but it's not going to get you the business. What's going to get you the business is business development people, research and development, process engineering, going out and creating customers, and very importantly, putting together a service package where the value that you're selling is not just the product, but the total value, the expertise, how to use it, how to reduce your costs, how to get more water, how to get, and so on. It's that mindset change, which I think is very exciting, but is also a threat, because if you don't learn how to do it, then you're going to find yourself in a very, very difficult position, I think.
Thanks very much, Paul.
Thank you, Will.